Is crypto the future of money? Let's break it down. Cryptocurrencies have been around for over a decade now, but they're still a hot topic. Why? Because they're more than just digital money. They represent a shift in how we think about finance. Bitcoin was the first cryptocurrency, created back in 2009. It introduced the idea of a decentralized currency, meaning no banks or governments control it. Sounds revolutionary, right? At the heart of Bitcoin and most cryptocurrencies is blockchain technology. Think of it as a digital ledger that's secure, transparent, and almost impossible to tamper with. It's why people trust cryptocurrencies, despite not having a central authority. But will cryptocurrencies replace traditional money? Not so fast. While some stores and businesses accept crypto, it's not yet widely used for everyday purchases. One big reason is volatility. Cryptocurrencies like Bitcoin can gain or lose value rapidly, making them risky for everyday use. Imagine buying groceries today only to find your crypto's value drop 10% overnight. Despite this, adoption is growing. Major companies are starting to accept crypto or invest in blockchain technology. Even governments are exploring digital currencies like China's digital yuan. Regulation is another key factor. Some countries embrace cryptocurrencies while others ban them outright. The future of crypto depends heavily on how governments decide to regulate this space. So, what does this mean for you? Should you invest in crypto? Well, that depends on your financial goals and risk tolerance. Cryptocurrencies can offer high returns, but they're also highly unpredictable. If you're considering crypto, remember research is crucial. Never invest more than you can afford to lose, and always diversify your investments. The future of cryptocurrencies is uncertain, but one thing's clear: they're shaping the future of money. Whether they become the new norm or remain a niche investment, they're here to stay. What do you think? Will crypto become the future of money? Let us know in the comments.